Welcome to the Harvard House Money Morsel, where we use the power of social media and video to keep you up to date with what's moving the markets and your money. Good day once again. We hope you're enjoying our short videos that keep you up to date. Please don't forget to like, subscribe, and press the bell to keep up to date. Today I'm sitting with Michael Porter, Chief Investment Officer of Harvard House. Michael, yesterday we had Enoch Godongwana, our new Finance Minister, with his first budget. It looked from the outside like it was a fairly uneventful budget, but would you be able to give us highlights of what we should be aware of?
Sure. Morning, Robin. Yeah, I think it was a relatively uneventful budget, which is always good actually in the context of a budget. So I think you can look at the budget from 2 points of view. You can look at it from a personal point of view, how it affects you or I, the man in the street. And I think from that point of view, it was quite a positive budget. There was tax relief in terms of widening of the tax brackets, and for the first time probably in living memory, there was no increase to the fuel levy or the road accident fund levy, which at the margin does help with the petrol price increases, and just is I think an acknowledgement that consumers are under a bit of pressure. And at the margin it also helps a little bit with inflation in terms of lowering the base, and especially in this environment where oil prices are going through the roof because of what's happening in Ukraine. So from that point of view, I think it's very positive. Obviously, the extension of the social grants as well is a big boost to sort of poverty alleviation. And then also, I think from a personal point of view, the changes to Regulation 28, they're not material, but the offshore allowance goes to 35% from 30%. And they're going to introduce some flexibility to invest in infrastructure assets and things like that, which I think the investment industry has been calling for quite a long time. So I think from that point of view, it's all positive. From an institutional point of view, if you look at from the economic side, I mean, the budget, I think you have to look at the path that we've already taken. I mean, the budget doesn't paint a wonderful picture of SA, but we knew that. I mean, that hasn't changed. I think what's important is the incremental steps, and from that point of view, it is a positive. Government collected 182 billion more in tax over the last 12 months than they expected to, thanks to really good commodity prices, which is, at least we're benefiting a bit from what's happening globally. So there was some additional spending on COVID grants and things like that, but the budget deficit has dropped from 10% last year to 5.7% this year, which is significant. So listen, there's a few positives. The debt situation's improved. If you just cast your mind back to October 2020, the debt to GDP ratio was forecast to reach 95% of GDP. Now it's expected to peak at 75%. And that's partly because they revised the GDP statistics, but obviously also because of better prudence and fiscal discipline. And then we had the corporate tax rate cut of 1%. 1% doesn't sound like a huge amount, but the fact that the tax rate's coming down is obviously positive. It underpins earnings, it underpins the economic case for local companies, and hopefully will help them to, hopefully will encourage them to make a little bit more investment into the economy. But there's other things that are concerning as well. 46% of the population receives social grants, and so if you think about the interest bill, which is 302 billion. The amount on social grants is 364 billion. Those two items alone consume 31% of the budget. And it doesn't leave a huge amount of money elsewhere for investment in infrastructure. So there is an allocation towards infrastructure in the budget, which is an improvement. And I think it's off a low base, but there is obviously some momentum in that sector. But really, there isn't a lot of flexibility that the government has. But with what they do have, and the windfall that they have received this year, it's a positive. So I think the budget was relatively non-eventful from that point of view. In terms of our own thinking on portfolios, I think the budget really supports our whole theme of the support to consumer in terms of the social grants, the tax cuts at the low end of the spectrum, no fuel levy, all those things really support consumption at the lower end. But there's also, I think, adequate there's a little bit of hope for essentially the reform momentum to continue and the infrastructure drive to sort of pick up. So I think in terms of the themes that we've been looking at, I think the budget reinforces that.
Oh, fantastic. And Michael, I've read a lot about the reform at SARS in terms of their collections, and there seems to be a lot of this additional tax that's being collected, which has benefited us in the budget because of a better SARS. Do you think that is going to continue to have a benefit going forward?
Yeah, I think one of the interesting points in the budget that they actually highlighted was that some of the taxes that they've introduced over the last couple of years have worked, like the 1% increase in personal tax rates in, I think it was 2015, 2016, and then the 1% increase in VAT. They specifically commented that the introduction of a higher tax bracket at 45% has not worked. I mean, they've actually collected less tax than they budgeted because of that, and they alluded to changes in behavior, which I suppose is tax evasion. But I think that's got a lot to do with immigration and that whole hollowing out of the tax base that we've talked so much about. But yes, I mean, SARS has definitely improved. They're introducing new requirements for high net worth individuals, and that if you earn over 50 million, you have to submit an asset and liability sort of thing with your tax return to see where the wealth is coming from. So I think SARS is definitely much improved, and I think the tax base from that point of view can widen. But let me just give you one quick statistic. There are 15.1 million registered taxpayers in the country. Almost 10 million of those pay only 2.5% of the tax. 7.5 million of those registered taxpayers pay no tax at all, and you know, another 2 million pay 2.5% of the tax. So the tax base is extremely narrow, and SARS will do well to widen it. But it's not just on the individual side; it's also on the corporate side and clamping down there. So yeah, I think SARS is doing a great job.
Awesome. Michael, thanks so much for giving us some of your time. You've given us some amazing nuggets there. Please don't forget to press like, to subscribe, and link the bell, and join us for our next Money Minute. Thank you, Michael. Bye-bye, viewers.
Bye-bye.